Morning everyone. So it has taken years for us to understand what Bill Gates meant when he said, so banking is necessary but banks are not. So he said this in 1994, but today we are experiencing it and it is becoming true. So this technological development that has led financial services industry to grow faster, and it has changed the way we bank as well. So simply, today's financial consumer needs an anytime, anywhere and personalized user experience. So with that, it has become the high time for us to discuss on the digital financial services. To discuss on this topic, here we have Mr. Bimal Perera, who is the Deputy General Manager, Strategy and Digital Finance at LB Finance PLC. So once again, we warmly welcome you, and your presence here today is a great honor to us. So Mr. Bimal, let's start. Yeah. So we can start our discussion by giving a brief introduction to the financial services industry in Sri Lanka.
First of all, let me thank the department and the university for inviting me. So, Chinese, when you say financial services, that's one of the largest industries in the country. And in terms of asset size, it is as big as the country's GDP. So, if I share my screen now.
Not yet.
So I was saying the size of the industry is as big as the Sri Lankan economy. So if you look at the entire financial sector, you get the banks, you get the non-banks. So you have the regulated central bank, and then you also have the provident funds and other deposit-taking institutions. But the crux of this industry, or the core operations, are handled by the banks and non-banks. So if you look at the size, I mean, I'm quoting some graphs from Advocata Institute, slightly outdated, I must say. So as at end of 2019, the financial services sector was about 20 trillion rupees, of which about 80% to as much as 16 trillion was the size of the banks and non-banks. So we keep saying Sri Lankan economy is about 16 trillion or 80 billion USD. So that's the size of the financial services as well. So this is dominated by the banks, which take about 90% of the assets. So that includes the central bank as well. Of course, central bank's balance sheet may have got expanded over the last year or so, but as of end of 2019 or early 2020, 90% of the assets of the banking sector was with the licensed banks, and about 10% with the non-banks, the finance companies. So, I mean, at the risk of oversimplification, these are the institutions that are in this whole pie. So you have licensed commercial banks, a lot of them are local, and if you look at the market share, most of the local banks dominate the industry. And then you have foreign banks, about 12 of them have been operating in the country for centuries now, but mostly having a one single branch operation as a representative office. So this is the largest segment of the financial services, and then you get the specialized commercial banks like the NSBs, the RDBs, which have been enacted following an act passed in the parliament for a special purpose. And then you get the finance companies, or the licensed finance companies. There are about 37 of them, but the top 5 companies control about 80-90% of the assets. So that's the breakup of our financial services. And if you look at how the assets and liabilities stack up, the banking sector basically has funded the 60% of the assets using public deposits, and then there is also quite a substantial amount funded through wholesale funding. As opposed to finance companies, there is a larger reliance on public deposits, which is why there is always that fear when a finance company is under threat, that depositors will lose money. So there is a higher degree of reliance on public deposits.
Right. So before moving on to my next question, I would like to ask our audience to send their questions and opinions through the chat. So Mr. Bimal, we were talking about the financial services industry in Sri Lanka. So looking at the last couple of years, especially year 2020 and 2021, so every one of us got affected from the COVID-19 pandemic. So it brought a lot of uncertainties for the business organizations as a whole. So it was same for the financial institutions as well. So how did financial services industry in Sri Lanka adopt to this new normal over the course of pandemic?
Well, let me start by saying the transformation in the financial services actually began much before the pandemic. A pandemic may have actually accelerated that process. But prior to pandemic, I think the banks and the financial institutions predominantly they were offering the online access to their banks, and this was taught as the digital banking. So the customers, either through internet banking or through a mobile banking application, had access to their bank account. But if you look at what has been happening across the world, I think the other regions or other countries, sometimes even developing nations, maybe sometimes a little underdeveloped than Sri Lanka also, they've taken bigger strides in integrating digital services to banking and financial services. So it's not a question of whether digital banking, the future of digital banking. I think the future of banking is digital. So I mean, it's not a question of opting to integrate. I think if the banks and financial institutions don't adopt to technology and integrate their core banking operations with technology, very few of them will actually survive over the next decade or so. So what the pandemic has done is actually the people, prior to pandemic, the fluent and the tech savvy and the young population were anyway comfortable dealing with the technology in accessing, at least checking their bank accounts. But with the pandemic, I think there has been an increased need to do contactless payments and have accessibility to your bank accounts on the go. And even the people who have been traditionally a bit reluctant to adopt to new technologies, they were forced to. So with that, I think the banks had no other choice to accelerate their transformation as well. And you see that has happened in Sri Lanka as well, and lots of banks have actually pretty much discontinued physical banking for cash transactions now. Most of them encourage either online transactions or CDMs. I mean, there is a charge if you go and actually deposit money now at a counter. So that has taken place, but I think the challenge ahead of the industry is how do we take it forward from here, and how do we integrate more and more core banking services into the digital front. So our changing customer, the changing generations, the new generations that come into the economy are able to transact the way they want. So that's the real challenge ahead of the industry, I would say.
Okay. So as you said, during the pandemic, financial institutions, they have simply changed the way they deliver their products and services. So what you said is correct, because I think the recent study conducted by Ernst & Young, so 43% of the respondents who participated for the study, they have said that they changed the way they bank during the pandemic. So as per your experience, how has the financial consumer just changed during this pandemic and even prior to that? So what sort of behavioral changes are there?
Okay, I would, I'll take this opportunity to show you this slide. Okay. I mean, when you think of a bank, traditionally, this is the image you get in your mind, you know, this concrete structure with columns. So that's what you think or used to think how a bank should look like. But come today, this concept is changing, right? So as you can see in this diagram very clearly, it's no more a brick and mortar and a physical concrete structure anymore. So your future bank will actually be your mobile phone. Basically, all your services will be available to your mobile phone. So why we say this, why the industry has to understand this change, is actually explained in the behavioral change in our consumer, right? So if we actually look at what has been happening in the global population, this applies to Sri Lanka as well. So we know there are different generations have different tags. So there are millennials, the Gen Z, Generation X, the boomers. So now we see the millennials, that is basically the people who were born after 1981 up to 1995, I think. So the millennials actually taking over or becoming the more dominant consumer segment over the next 10 years, right? And also then the Gen Z, which is people, probably you, all the undergraduates are in that Gen Z category, born after 1996. So I will take a little time to explain what the behavioral differences of the generations. So the baby boomers, actually, you know, we know this, they were born after the Second World War. So they are very comfortable consuming information using traditional media, TV, newspapers, and they prefer to go to a branch to perform a transaction. So if you just think of your grandparents, right, or maybe, you know, for me, my parents, they fall into this category. And then you get the generation X, the next generation after 1965. So they are probably, you know, for undergraduates, you have to think of your parents, right? So they still read newspapers and they watch news, right? They are somewhat digital savvy, but they still prefer going to a physical branch and doing an in-person transaction. And then became the millennials. So they are extremely comfortable with mobile devices. They use social media. So they like to search on Google things before they buy, and for them, banking is not a relationship thing. It's not a relational thing. It's more transactional. So they want the transaction done quickly, efficiently, and cheaply. And then you get the next generation, you guys, Gen Z. You know? So you have grown up into the smartphone. Generally, they spend 3 to 4 hours on the smartphone, right? So probably the first device you touch when you wake up, the last device you touch before you go to sleep. So with that, you know, you're very comfortable accessing your bank or financial transactions using a mobile. So that's the next generation. And the graph below shows you how our population stacks up into these different generations. So I've taken only the economically active population. So we have 15.2 million in the adult population, but roughly 7.6 or half of them are in that millennials to Gen Z category. So roughly 50% of adult population now in this category, right? So they will become the more dominant generations in the next 10 years. So with those behavioral changes I explained, the challenge for the industry is to adopt their services so they stay relevant to this generation. So if you ask me, does it mean that the bank branch and the physical operation will go away? No, you still have the boomers. You still have the generation X who would prefer going to a physical branch and talking to someone before doing a transaction. But as you would see in this slide, the disposable income of the millennials will become the highest by 2030. So financial services is all to do with money and wealth. So if you anticipate a certain generation, a certain age group to become the dominant segment over the next 10 years, and if you know their behavior is quite different to the generations before them, so it's up to you for your own survival to adapt your services to cater to their needs. So that's the challenge. So that's the change of the consumer. The change should be understood with reference to the age generation as well. I hope I answered your question.
Yes, so as you said that consumer behavior has changed over time, and also as per the points that you highlighted so far, it's clear that our financial services industry is growing faster with the technological development. So as per your opinion, what sort of technological developments are mainly affecting to the financial services industry?
Okay, so I can think of a few real breakthrough technologies that will change the shape and the way we function as an industry. One is blockchain. So now blockchain, I'm sure all of you know what blockchain is, at least have some idea. So people say blockchain is the next internet, right? So as internet changed our lives in mid-90s, blockchain is going to change our lives as well. The difference is it's a distributed, decentralized network where everyone sees what others are doing. So how it's going to change the financial services is it's going to take away or do away with the middleman, because you need a clearinghouse or a middleman to certify transactions when they are not done in a distributed or a transparent way. But the blockchain takes away that requirement. So the transactions are visible to everyone, so they become cheaper, especially the cross-border transactions will become much cheaper, and lots of fintech companies are exploiting this opportunity through blockchain. So then another key thing is the IoT, the connected devices. I mean, I'm sure most of you in this audience must be owning at least 2 connected devices, a laptop or a smartphone, maybe a wearable connected again, and maybe at home a smart TV as well. So we have lots of connected devices, and those connected devices actually, one, they help you to perform your transaction as a part of your lifestyle, right? So you can perform a transaction while you're driving. It's not the right thing to do, but you still can do it. So maybe once when you're exercising with your wearable, you can still perform financial transactions. So they have become a part of your lifestyle. The third technology, the most important, is the big data and the AI. So actually that's an extension of the internet connected devices. So more devices you are connected with, more digital footprint you are going to leave. So that will have the banks and the financial institutions will be able to know what your search patterns are, what your likes, dislikes, where do you like to travel, and what your opinions, your behavior, so all this data, then this large amounts of data helps the companies to create profiles for you. So there is a unique profile, a digital profile for every customer, because you left a lot of footprint, you left off a lot of data about yourself. So with these profiles, they can derive insights and focus how you are going to behave in the future. So you are going to see now when you are next time you are browsing, I'm sure you have experienced it, the search engine throws up things that you could be interested in. Actually you are interested in those things because they know how you think because of the data footprint you left. So those, I think those three, the blockchain, the IoT, and the big data and AI are three technologies I think will have the biggest impact in changing the landscape of this industry.
Okay. So when you talk about the technological developments in this financial services industry, you highlighted one word called it fintech. So what exactly meant by the fintech? And is it delivering any opportunities or threats to establish our financial institutions?
Right. So fintech is the acronym for financial technologies. So these are basically technologies or tech companies which are trying to perform financial transactions. So why fintechs actually emerged into the scene? Because after the financial crisis in 2019, 2009 and 10, lots of big banks had to deal with the compliance issues. So they had to deal with the fines, higher or stricter regulation. So really the innovation was never in their mind. So their more focus was on compliance and getting their regulatory requirements in order. So that created an opportunity for people to come and innovate and take a share of these financial services. So that's how the fintech, that's how the fintechs emerge. So they look at, so they are not going to do what the bank does, right? Bank does so many things, right? From taking deposits to, providing credit and, facilitating payments and, custodian services, funding projects. Fintechs are not involved in becoming banks. They will look at, they will identify an area where they see the most profit, right? And also from the customer's point of view, where they see the biggest friction. So the customers where they are most unhappy. So that's where they are trying to innovate with technology and get that part of business away from the bank. So what happens is when several fintechs try to take away, small aspects, basically the bank loses a lot of revenue streams. So that's the real threat. So the fintechs are mainly into, you can categorize them into mainly about 5 areas. One, they facilitate payments. Then they also help you to mobilize savings and investments. Then there is lending aspect. And then also for remittances, for cross-border payments and remittances, there are lots of fintechs in that space. And then you call them insurtech. There is insurance also, that industry is also seeing a lot of changes with the advancement of fintechs. So in these 5, under these 5 pillars, you see fintechs operating across the globe. It's not just a phenomenon in the developed economies. Even places like Sub-Saharan Africa, Latin America, you see lots of fintechs. One, they are actually threatening the larger banks and taking some revenues away from them. Two, they've also innovated in a way that people or the segments of the population who hitherto had no access to financial services, like the underbanked people, they've been able to bring them into the formal financial streams. So that's with the use of technology, the mobile technology mostly. So they have few, values or principles. One will be mobile first sort of an approach, and then they'll also try to keep customer at the center, right? So it's speed, efficiency. So efficiency brings speed, and then accessibility brings convenience. So these are their the key value proposition. And then of course they are very transparent with their pricing. Generally their fees are low. With those advantages, they can, they can't replicate what the bank does, but they can actually do a certain function that the bank does much better than any bank would do. So that's the real story behind fintechs and the threat that the fintechs are posing to the legacy banks.
Okay, so here we are talking about the technical developments which are affecting to the financial services industry. So I would like to bring another concept called the neo-banking. So as per your understanding, what exactly meant by the neo-banking?
Yeah, so the neo banks, or sometimes you call them challenger banks, so it's an extension of the fintechs, where they are now not happy with just handling one aspect of banking. They want to handle more, but they are completely digital. So these are virtual operations. So they don't have a single branch, completely digital native, and there are regulatory regimes which are actually issuing licenses for neo banks or digital banks. But then they always have this, most of them have the problem of compliance and meeting some of the regulatory capital requirements. So what they do is they act as a front, handling all the customer transactions, and then they use the back end of established legacy banks to perform the back end transactions and to also satisfy the regulatory and compliance matters. So it's an extension of fintechs, where they now look at not just one business or revenue stream, where they try to handle 3, 4, mainly the customer facing products and services without having a single physical branch, but connected to the mainstream banks for the backend operations. So it's a nice combination of where even the legacy banks have realized now. If you look at a large bank, there are lots of, they are limited by the what their core banking system can do, right? So they also have to perform lots of, make sure the security aspect is taken care of, and then there are regulatory aspects also. So when you try to innovate in that restrictive setup, it's not so easy. One, you have to spend a lot of money and it takes a lot of time. So this is the best collaboration you can have, where you don't try to change your core banking so much, but you integrate with these neobanks or the fintechs. You open out your systems and data. We call it open banking, and try to coexist rather than trying to outsmart each other, because both have their strengths and weaknesses, right? So neobanks also cannot exist on their own because they don't have that the back end sometimes to satisfy the regulator. Because the difference between fintechs and neobanks is fintechs are mostly unregulated, right? So they don't come under regulator. They don't seek a license to operate, right? They're just happy with what they're doing and earning money. But neobanks try to operate like banks with a digital license, but with a virtual setup. So I hope I made it clear.
Yes.
It's an extension, but it's not the same.
So your answer about the neo-banking was very clear for us. So moving on to my next question. So if we be more specific to the Sri Lankan context, so we feel like banks and the financial institutions, they are working hard to develop their digital capabilities, as you said. So, but if we look at the consumers, like they are very slow to join this revolution, because we can see still people are waiting in the queue at the bank to withdraw money and to deposit money. So, I would like to know your opinion on digital bank adoption in Sri Lanka.
Right. So, in Sri Lanka, of course, I wouldn't say we are too different to the regional players. Actually, if you look at our adoption of, I may have a diagram somewhere. Yeah. So, if this is clear, our adoption of online or mobile banking services are on par with the rest of the emerging or developing economies. If you look at the more affluent segment of the society, in the Sri Lankan society, their adoption is actually as on par with the developed world, right? So we are not so far behind. But I think in any technology, what happens is you have the early adopters, right? So that includes probably you and your age group, and people who are tech savvy and who want to who are keener on consuming financial services through the mobile. But the challenge, not just for Sri Lanka and also I think, but also for other countries, is getting the critical mass, the rest of the population to follow and adopt to these technologies. So there, I think there are things that we can do to improve this. Now, if you look at this, diagram, I think most of the responders, this is actually a survey that was done by BCG, Boston Consultancy Group, on the digital banking adoption in Sri Lanka. So they are the for checking accounts, for making payments, instant payments, digital payments, I think we have a very high adoption rate. But where we have a very low adoption is when it comes to, let's say, opening a bank account completely digitally, or availing a credit facility digitally. So that those are the aspects, the core banking aspects, where we've still struggled to completely make digital. And those are the opportunities also for the incumbent players to innovate. So they are actually, I must mention the Central Bank of Sri Lanka here. So they are actually taking a very, I would say, a leading role. They are playing a very leading role in driving this digital transformation. So there are lots of technologies that the Central Bank itself has introduced. In fact, just before the pandemic, they named the year 2020 as the year of digital transactions. There is a lot of thrust coming from the regulator itself. And now if you take opening a bank account, because it's a bank account, you have to perform a KYC on your customer. Now, where we are probably lagging still is we can't perform 100% virtual KYC. Right? I think we've made some progress in doing video KYCs and all that, but I think one of the biggest constraints to Sri Lankan consumer and the industry is the lack of a digital ID. So we still have a very paper-based ID where, I mean, if you take places like India and some of the Latin American, African countries, they have this digital unique ID which helps the KYC process much easier. So those are things that we are probably lagging behind, but the industry is trying to do work with whatever is available. So the video KYC is a compromise where although we don't have a digital ID, we try to have a video call with the customer and onboard them totally in a digital way. It's not a very seamless experience compared to other countries, but I think we are doing the best we can. Yeah, so I think digital ID will have a significant impact, especially taking these products and services to the middle income and the low income segments, because a physical KYC is a very expensive operation. So if you are to perform that to a low middle income customer who probably would do very few transactions per month, then the customer, of course, the bank looks at the revenue and the cost in maintaining that customer. But a digital ID changes that completely, where your onboarding process can be digital and the cost can come down and you're able to scale that business exponentially.
So as you said, if this digital adoption rate is relatively low in Sri Lanka, so what sort of actions are you taking as a leading financial institution company in Sri Lanka?
Well, of course, our company has also made significant investments over the last couple of years to, change our financial services, what we offer, into a more digital form. But I wouldn't say we are the only company. There are lots of other companies, banks, making different efforts. So digital transformation or digital financial services I wouldn't say it's a fixed concept. It's a spectrum. So the companies and the banks have decided in that spectrum where you want to be, right? Depending on your risk appetite and the investment and the capacity. So as a company, we have introduced our digital wallet, digital bank account, called SIM. SIM stands for Cash in Mobile. So, but there are other products, similar products in the market, offering a similar functionality. But what we aspire to do, and to how to maybe to stand out from the competition, is to go beyond just facilitating payments and to make our customers, give them the option of accessing credit on the go from the mobile app. So I think I'll take this opportunity to caution the audience. There is a reason why the digital lending hasn't taken up so much in Sri Lanka, because the regulator has put a lot of conditions, requirements for the lenders to comply with. But you see I'm sure you would have seen on Facebook, on other social media channels, there are so many internet-based lenders, right? So these are unregulated guys, right? And purely for the ease and the speed of getting money, a lot of people, get caught with it, right? But they charge exorbitant rates. What the industry is trying to actually achieve is to come to a middle where we won't be able to ever make it as easy as the unregulated guys make it to access credit, but we can actually make it better than what we've done so far, and take those core financial services to the tip of the consumer's fingertips. Now, I must mention, since you asked, a couple of very key technologies that central bank led Lanka Clear has introduced, which has changed the way we do transactions. Now, I'm sure most of you must be using a mobile banking app, right? So there are plenty of apps now available, just like ours. There are plenty of apps. One of the key technologies that make this mobile banking grow is the technology called Just Pay, right? So that's a technology supported by central banks and the Lanka Clear, where you don't have to have a bank account with the app maker or app promoting company. You can just download the app and link your other bank account and top up money and perform transactions. So that's a major advancement that we've seen that is helping to grow the digital transactions. The second, of course, is the Lanka QR. I'm sure you heard of QR transactions, and if you traveled overseas, to India, to China, you've seen QR transactions everywhere. So the contactless transactions is not a new concept. But in Sri Lanka, we still see cash transactions being the predominant mode of transaction. So this is where the central bank has come forward to promote the national QR, the quick response code, Lanka QR, to take these all these petty small transactions, maybe buying a king coconut or paying to a grocery, small payments that we do on everyday basis, make them digital. So that's another important technology that the regulator is pushing, along with Just Pay, to popularize the digital transactions in the country.
Okay. So when you're trying to move into a digital era by introducing new digital financial products, so are you getting the enough support from the government? What sort of support is further needed from the government side?
So as I mentioned, the regulator has been very, very supportive, the central bank, because of course they see what is happening around the country, across the globe. So there is no way out, right? You have to adopt to technology, and the regulator has been playing their part, actually even taking a leading role. But where I would see the government or the policymakers can help is, I think, expediting some of these key transformations, especially now. Let's say if you are using a mobile banking app, so now you can make any bill payment or do a mobile reload, transfer money to a friend, or all that from your phone. But then, let's say the Lanka QR is in use, and you can still go and make a small payment, but you go to a government institution, you don't have the contactless payment or QR payment facility. So that is where I think the government can actually come in and come forward, then get all their institutions to accept contactless digital payments. I see some progress happening. Recently on the expressways, right now, actually you can make QR payments, without exchanging notes or coins. You can actually make a QR payment at the Southern Expressway. So that's a very positive step. But then it has to go beyond. Actually, people do drive, and there is this experience by most motorists that you get caught to police sometimes, for breaching a traffic rule. So it's a very unpleasant experience paying this traffic fine, because you have to find a post office, and but if you can bring that payment option to the a QR option, I think that is what we call the real integration of the digital payments into the lifestyle of the Sri Lankan consumer, right? So there are things that where the government can actually push and make the digital payments available in the government institutions and their services, which will see a higher rate of adoption. Now, for example, recently the local authorities have started sending their assessment tax receipt with a QR code. So that's a very positive development, because now you don't have to go to the municipal, go to shop and make payments. You get your tax receipt, you scan from your banking app and make a payment. It's maybe a 30-second transaction as opposed to a 2-hour journey that you would have otherwise done. So there are things happening, but I think maybe as an industry we wish if things could happen faster. But there is always that hope.
Yeah. So when that financial industry is moving towards a digital era, so as you said, central bank and other regulatory authorities, so they have to rethink and restructure their regulations. So what sort of regulatory changes have brought forward, and also in order to further improve this financial services industry, what sort of regulatory changes are further needed?
Yeah, so as I said, Jani, the digital ID will expedite a lot of onboarding of mass customers or mass segments who are still not in this scheme. The other thing that the regulator is working on is a shared KYC. As you would know, now if you open a bank account at a particular bank and you go to another bank to do a transaction, you have to go through that experience again. We are filling the same forms with the same information, because between the two banks they don't share their information, right? It's the same information. Maybe it was given a week before, but you still have to do that all over. So this is where the shared KYC project, which the central bank is pushing, will become very useful, where with the customer's consent. So if you go to bank A and you have an account, you go to bank B now and you tell the bank B, get my data from bank A, right? So if we have the shared KYC framework with the customer's consent, your second bank can access your data, which is stored in bank A, which will take away a lot of form filling and all these delays. So that's a very positive development that we see on the horizon. And of course, the digital ID will facilitate a lot of virtual transactions, because you can onboard customers remotely, virtually, and that will save a lot of cost for the companies. And you can onboard customers for a small transaction. Even for a transaction that is worth only 100 rupees, you still wouldn't mind doing it, onboarding that customer, as long as you can do it remotely. But if you have to build a branch or send an officer to complete that transaction with the customer, no one's going to be interested. So those are, I think, a couple of key things that I think the industry is looking forward to.
Okay. So through this discussion, we were talking about how financial services industry has changed over time with the technological development. So before concluding this session, I would like to pick a couple of questions from the audience as well. So let me read out the question. So even though technological developments bring a lot of opportunities to the financial services industry, still there is a room for unauthorized access to the bank accounts. I think he or she is talking about the data privacy and the confidentiality. So what kind of security measures you have taken when you are developing new digital financial products?
Okay.
I think here you can explain about the financial products that you have introduced into the market, and also the security measures you have taken.
Okay. So it's a very good question, because with the technology, and when you perform transactions remotely, there is no face-to-face interaction. I think the risk is always whether somebody can have access to your savings or bank account. So then I think all the banking apps in the country, right, they have to go through a process of getting verified for security compliance before they actually launch their products. That's a standard mobile security standard that that everybody has to follow, and it has to be verified by an independent audit before they actually get their license to operate. So what it does is actually, the advantage of a mobile wallet as opposed to performing a transaction on the internet is that in a mobile wallet, your account is actually bound to your device, right? So just because somebody gets to know your password PIN, you can't perform transactions from his account using another device. So you have to actually steal the phone also in that case, right? So it's device, it's locked with the device, right? So that's one security aspect with mobile banking. And then of course, I think all the banks, when they perform transactions now, they send you an OTP, right? One-time password. So this is very important, I think, even to educate our customers, to increase the awareness, where the OTP is only meant to you, right, for your information. It's not to be shared with anybody. So the instances where we have seen frauds taking place, are instances where the customers unknowingly have shared their OTP with the fraudster, right? So they contact you in some form or the shape, and they tell you, look, you will get an SMS and tell us the number in that SMS. So the very gullible, vulnerable customers would do that, and then they wouldn't know the money is being actually taken away by this fraud. So, so it's important to understand that the OTP is actually for your own account security and not to be shared. And as far as the mobile banking apps are concerned, they have adhered to the highest security standards. So there is no way you can hack, because it's bound to your device. Only way you will lose your money is if you actually share your credentials unknowingly, right? So I think it's to do with, I mean, of course, there can be more that we can do as an industry to improve security, but it's also to do with increasing awareness among the consumers in how to safeguard their credentials.
Okay, so there is another question. How fintech and technological development have affected to the careers in the financial services industry? So I think you can give a very long answer for this, because a lot of undergraduates are like watching this live discussion.
Yeah, so, right, so they say the visionaries, all these industry visionaries say that the banker of tomorrow, banker in 2030 will be very different to the banker of today, or probably a banker 10 years ago. Now, at least from what I remember during my, if I go back 20 years, the banks used to be, physical operations where you had a lot of people, sort of human-to-human interaction, and the jobs in banks involve a lot of transaction processing, right? So you have lots of data where you have to sign off, check, and process these transactions. So what the technology has done is they've taken away this transaction processing, and the technology is actually processing transactions. So you don't need so many people now to process transactions, right? So there you are going to see some jobs being, jobs disappearing, right? But that doesn't, that doesn't mean that, we will not see new jobs being created. So the bank of tomorrow is actually will have different skill sets, right? I mean, of course, you will understand the basic fundamentals in finance, banking, economics, but you also have to be skilled in technology. You have to understand how data works, how technology works, and most importantly, the customer-centric approach when it comes to creating your financial services. So, I mean, if you take the banks today, I mean, maybe 10 years ago, they wouldn't have a personalized solution for you. What you would see now, maybe if you are a high net worth, you will have a personalized service, not a personalized product, right? So there is relationship banking to give you a personalized service. But how that is changing is now you are going to have personalized products and solutions to you. How that is being made possible is because the banks now have a lot of data about you, right? So with that data, you can hyper customize the products, right? So they will know Jayan is now planning to travel, mid next year, because you've been looking around on internet what options are available. So when you do that, they will offer you solutions, maybe a travel package to pay in 3 months, right? These are what I mean by hyper customized solution. So it's not having a standard product and giving a personalized service. It is actually offering personalized products now, right? So that is where you need to be reskilled and understand how technology works, understand how your consumer is evolving and their behaviors are changing, and adopt to that. So there will be, jobs like, the future banking jobs would involve a lot of technology. And so invariably you have to learn how the technology works. Design thinking is one concept where I think the banks are relying a lot on, because you want to understand how your customer thinks and design products to suit their lifestyle. So these are some of the areas where we will see new jobs coming up, right? So you will see those mundane transaction processing jobs disappearing, and jobs that involve technology, innovation, coming up. So as a undergraduate, who's aspiring to be, I mean, if you ask me, the financial services today is a much more exciting place to be compared to what it was 10, 15 years ago. But it becomes exciting if you adapt to it, right? Keep pace with it, and learn new skills. So that's the message. If I can pass to the audience, that it is quite different to your conventional banking, right? I had one more slide, I think.
You can show it. You can share your screen for me.
Yeah, so this is a very popular slide or diagram. So they call it the bank 4.0. I mean, this industrial revolution 4.0 is a very catchphrase now. Everybody speaks about it. So the banks also have to adopt to this IR 4.0 and become banks 4.0. So what they'll have, they'll have very embedded experience. So it's not you walk into a branch to get a service. No, when you consume other things, when you access other services, you should be able to access your financial service. So it should be embedded into your lifestyle. And there'll be big data, right? There'll be AI using that big data to hyper personalize your solutions. And then there'll be open banking, where you will see the fintechs, the neobanks accessing the core banking of the legacy banks to offer innovative solutions. And then, of course, I think the earlier question that we were alluded to, the cybersecurity is going to be an important area, and everything will be digital and scalable, right? So you are not going to be limited by the number of branches or the number of people in a branch or counters in a branch, bank counters in a branch. Those are not limitations anymore to serve customers, because if you are digital, you are scalable, right? So therefore, this is how the bank industry is changing, and this is like a glimpse of what the industry will look like in 10 years time. So if you are an aspiring banking graduate, it's important to understand these changes, and you may not get a lot of exposure until you come to the industry and start working, but it's up to you to gather knowledge, read. There is internet, there is YouTube, there is TEDx for you to learn a lot, and be in a position to adapt to these changing dynamics of the industry.
Right. So today we did speak about digital financial services. So from the points that we discussed through this discussion, now it's very clear that financial services industry that has changed, and also that is changing with the technological developments. And also it has created new job opportunities, and also, as you said, some of the job titles, they have disappeared. So now it has become the time for us to rethink about the skills and the talents we needed to envision our career in the financial services industry. So before we wrap up, you have few minutes. Would you like to add anything to our undergraduates?
Yeah, so I think my last message would be open to change, right? I think it's great that you are following banking or financial services as your main first degree, but then there are lots of other technical areas where you can add to that knowledge that you can acquire via internet. There are many free courses available to add on to. So then it will enrich your profile when you come out seeking a job in this changing financial services industry, because it's not going to be the theory anymore, right? You must have a solid base, understand how the fundamentals work, but you must also have a very, very, I would say, an updated knowledge about how the industry has evolved. So it's I think you must have a thirst to gather that, gain that, acquire that knowledge. So you present yourself as a much more accomplished profile when you meet the industry for your first job. So that would be my parting message to all the undergraduates, and I wish them good luck.
So we had with us today Mr. Bimal Perera, Deputy General Manager, Strategy and Digital Finance at LB Finance PLC. So thank you so much, Mr. Bimal, for valuable insights that you provided. So, and also thank you so much for allocating your time amid your tight schedules. And also thank you very much everyone for your participation.